Today's show is brought to you by Van Eck. Listen up. There is a huge wave of demand currently and on the horizon from hyperscalers for data center power, and many of them have already looked to nuclear as a solution in the short to intermediate term. Why? Because it is both clean and efficient. It has one of the lowest emission profiles among energy sources, and it can produce power 24/7, unlike renewable sources that produce electricity intermittently. To learn more about getting your exposure to these companies, visit vaneck.com/NLR. That's vaneck.com/NLR.
Okay, we're taping this on Friday. Less than 24 hours ago, President Donald Trump issued his long-awaited executive order on crypto and digital assets entitled Strengthening American Leadership in Digital Financial Technology. My guest today is Franklin B., who is a partner at Pantera Capital in the San Francisco Bay Area with 10 years of experience building and investing in cryptocurrency. Graduated from the Wharton School with a BS in economics, Pantera is a pioneering investment firm exclusively focused on blockchain technology and digital assets. You guys are, I think, $5.4 billion in assets was the last number I saw. Is that low?
It changes by the day, but that's about right for where we are right now.
Okay. You guys have a really long history in terms of, crypto is maybe 15 and you guys are a little bit over 10. But I know you've made hundreds of early stage investments in different crypto companies and tokens. I also know you guys launched the first ever blockchain dedicated fund in 2013 when Bitcoin was $65 per coin. So I guess what I want to start off by asking you is, and I know you guys are big into Solana and we'll talk about all that. How does it feel to have the White House, the SEC, the CFTC, Homeland Security, the highest levels of government all on the crypto industry side for the first time in a decade and a half? What is that like for you guys right now?
It feels really surreal. I think we've been waiting for this for years. In some ways, it felt like we were in this twilight zone for blockchain and crypto technology, where there was just this perception that it was only being used for criminal purposes and that there was no value to the technology. When I first came into the space, it was through JP Morgan, which has been very vocal about blockchain and not Bitcoin. And, I actually got to start the blockchain team there back in 2015. So I came to it from that perspective. And now it feels a little bit like redemption. One of the things that I was doing for so many years was trying to convince people in the bank that this technology was going to help transform capital markets and payments and so many parts of the internet that just aren't open and aren't efficient today. Now they're talking about it. It started with the Bitcoin.
JP Morgan, to JP Morgan's credit. So you're there. Your role is to help build out blockchain technology and I guess assess the landscape and bring intelligence in about what's happening. The boss of the whole firm, Jamie Dimon, every chance he gets is referring to crypto as though it's some sort of a disease. But I guess to the bank's credit, there were enough people that were open-minded internally to keep researching, keep considering the possibility that the boss is wrong.
It's sort of intentional schizophrenia is how I think about it. When you've got an organization that big, you've got to have people who think differently. And, I don't know if we ever really made progress in convincing Jamie that Bitcoin wasn't a scam. I think that's still in progress. But we made it up to his direct reports at least. And I think eventually we'll get there.
Yeah, I think you will too. We talked to many people within JP Morgan on the wealth side. We talked to people on the research side. I think it's probably as close as it gets at this point to just full. I don't want to use the term capitulation. I would just say full on acceptance that, hey, this is not going away. But let's talk about what President Trump said. So the executive order. Basically, this is how they open it. The digital asset industry plays a crucial role in innovation and economic development in the United States, as well as our nation's international leadership. It is therefore the policy of my administration to support the responsible growth and use of digital assets, blockchain technology, and related technologies across all sectors of the economy. And then there are several items in here protecting and promoting the ability of citizens and private sector entities to access blockchains, to deploy software, to mine, providing regulatory clarity, fair and open access to banking services for people in crypto. So it goes on and on and on. And the only thing it really prohibits is the issuance of a central bank digital currency, which I thought was interesting. But most of this is exactly what was promised. And I think sometime around the summer of 24, like there was this dawning realization that, oh, wait a minute, conservatism and crypto are now completely aligned. And that's what this election is going to be about for people in the technology industry. And it worked. This is like day 2. You guys got your EO.
Yeah, it's amazing to see. Going into November, there was a ton of optimism in the blockchain industry, but also sort of a sense of holding our breath. Would all of this sentiment actually convert into real action? And I think with these executive orders and with the new task force, both on the legislative side and at the SEC, you're seeing that turn into real action. And that's great to see. The central bank digital currency part, I think, is unique because it shows that, we're going to take hopefully a very similar approach that we have in traditional banking as we will to cryptocurrencies, which is that the commercial sector and the public sector are going to have to work together rather than trusting that the Federal Reserve is going to somehow become a technology company overnight.
Okay, right. So in traditional finance, the Federal Reserve does not take deposits from consumers, does not act as a bank to Americans. It acts as a bank to the banks. And that's really important because that's exactly what you're talking about. There being this commercial layer in between rather than the United States government itself being, a bank to its own people. And so you're saying that the prohibition of central bank issued and controlled digital currencies, so there won't be a Fed coin. And you're saying that that's an important part of what's in this EO because it puts that discussion to bed and maybe backs off some of the people who are worried about government censorship of the way we spend money or some sort of like a social credit system. And it kind of keeps the two things separate enough.
Exactly. Mentioning the social credit system is, I think a reference to how things work in China, where there is not this separation between politics and money. And I think that's really important to preserve in America because the right to transact, the right to participate in the economy is essentially a right that we have as citizens. And so, I think having a central bank digital currency actually, sometime down the road can become something that gets corrupted. Whereas I think today, having banks and having intermediaries that actually serve as that distribution layer can actually be a positive for the economy.
Franklin, based on your experience in the industry and all of the people you've met and all of the people whose ideas you've read, who do you think wrote this executive order? Or who do you think contributed meaningfully to the language and the ideas that are in here? Because in addition to what I've quoted, there's this whole section about how it's going to be implemented and rewriting previous executive orders and rules from 2022 when it was a different administration, and obviously crypto was in a state of tumult at the time. So like all of that is being broomed out the door, and the language here is pretty sophisticated in terms of the way that crypto works. So like, who would you say is behind these ideas?
I think it's a combination of entrepreneurs who have been in the industry and have been good actors, right? It's folks like Coinbase, it's the Blockchain Association that have been working with legislators over the past few years to say, look, this is the kind of framework that we need. We've been talking to all the companies that are trying to do things the right way. And I think it's also something that David Sachs, who has been appointed as the crypto and AI czar, has been making sure is how we approach this kind of thing, is to actually listen to the industry. And when you look at some of the other parts of the executive order around protecting the access to the traditional banking system for digital asset companies, that's something that you'll only hear from founders, right? I mean, you mentioned we've invested in hundreds of companies across the whole blockchain ecosystem, and we've seen it firsthand. Dozens of companies calling us saying our banking accounts have been shut off overnight just because they saw the word blockchain or they saw the word crypto in our business.
This is the Operation Choke Point stuff that Mark Andreessen had been tweeting about, and it's amazing. You look at the replies to what he was revealing for the first time in the public eye, and all of a sudden people came out and said, yeah, that happened to me, that happened to us. So people trying to build companies in this space were treated like pariahs by the traditional banking system. I think in part because maybe there was some paranoia in traditional finance about regulators. And then but part of that is not really paranoia. We watched them execute a couple of banks in 2023 that were doing business with crypto companies. And it almost looked like this is a warning. This is what happens if you bank these people. So it was like a healthy paranoia. So you think all that stuff is probably done now?
Hopefully, whether it's a real or perceived paranoia, what it ultimately does, it has a chilling effect on entrepreneurs being willing to build in the space, right? Okay. And that's the biggest thing that I think will change over this coming year, is the actual impact of a lot of the policy will probably need 1 or 2 years to take place. But the sentiment that's going to change in the technology sector, where entrepreneurs have held themselves back from building on blockchain because it's just not worth it. Why would I spend the next 5 to 10 years of my life trying to build what I think is a meaningful product if it's going to get pulled out from under me, or if my bank accounts are just going to get shut down before I can even make this successful?
One of the aspects that I think the regulatory regime under Biden, and honestly under Trump 1, one of the aspects that they did not like about the crypto ecosystem was just the sheer amount of frauds and scams and people who were bad actors and people who were utilizing the excitement about blockchain and Bitcoins to their own nefarious ends. And of course, that continues to this day. And I think the presidential meme coins, $ Trump, $ Melania coming out a day before the inauguration, almost sort of like, I don't want to say justifies some of that regulatory distaste, but I guess it kind of like makes you feel that there is another side to the story and there is a need for there to be real regulations. What do you guys think when you see that stuff? Does it tarnish the industry overall, or can people compartmentalize it at this point and say, yeah, of course there are scams. There are penny stock scams too. We don't shut down the stock market over it.
It reminds me of that old Spider-Man quote, with great power comes great responsibility. And, the power of blockchain is that it makes the ability to create new capital markets, form sort of new marketplaces where this type of speculation can be almost put on steroids compared to the traditional system.
Yeah,
it opens it up to this kind of speculation that runs rampant. And, we're not looking for complete deregulation of the industry, right? We don't think that makes sense for the long term. We really want just sensible regulation where bad actors like FTX and Celsius end up not having free reign, while good actors actually can come in and work with regulators to actually come up with policies that make sense. The fact that wasn't possible created this huge adverse selection thing where the folks that had the most flexibility and the most sort of area to play in were the bad actors. And hopefully that can change now that we open a path for them to actually work with policymakers.
Yeah, so it looks like we're going to get some rules within 30 days on the president's desk for him to vet. That's part of what the working group is here to do. Under Gary Gensler, the SEC basically looked at this stuff and said, we don't need new rules. These are all just securities. That is not going to be the stance of the new administration. So we might have very similar rules to traditional securities markets, or we might have a radical departure. We may also end up in a situation where some of the rules for traditional finance are reconsidered in light of what you're able to do in the crypto world. And that's why I think this is such an important story for investors, whether they're heavily invested in crypto or completely on the other side of the spectrum and have no interest in it. I think this kind of like almost overnight revolution that's about to take place is notable and going to have a really big impact going forward for everyone.
And it ultimately just comes down to making sure that America stays competitive, right? I think the fact is that technology leads the world, and the U.S. has to lead in technology for us to continue being a dominant force. So I agree. I think the industry has been asking for new rules and regulation, and someone has to listen to that and say, look, we need to put in the work.
All right, so let's turn to your predictions for 2025. This is a really great piece. This is available at PanteraCapital.com as part of your ongoing blockchain letter. This is the year ahead in crypto 2025, which you published a couple of days ago. And here's a couple of great quotes that I'll just pull out here, and then I'll have you react to your own writing. Sure. You said the best venture investors don't predict the future. They see the present with great clarity. One thing is clear about the year ahead. 2025 will be a turning point for the crypto industry. And you point out, like, imagine the state of the internet if Jeff Bezos went to jail for selling books online, or Steve Jobs were sanctioned for launching an app store, or Jensen Huang had to build NVIDIA offshore because his bank account was being closed. That's the twilight zone that our industry is emerging from. Okay, so that's over now. And so now the question is, what happens this year as a result of those shackles coming off and there being a framework to actually do legitimate business and build companies and train people and hire? Like, what should we think? What should we think about in the next few months?
Yeah, it's a great question. You know, being in the industry for so long, we hear the critiques coming from folks outside the industry.
From me.
Yeah, sure. Yeah. Look, you've been selling us this dream for so long. Where is it? Right.
Where is
it? I think what I want people to take away is, look, this is the first time that a new technology has been held back so much by regulation. You know, you didn't see this to this extent with e-commerce and the internet and social networks. And so a lot of the entrepreneurial energy has been held back. A lot of products have been held back from actually being embraced by the customers who want it. So, I think there's a couple of areas that will really start to take off now that the regulatory landscape.
So let me tee you up. You point to a convergence of three mega trends to unlock crypto adoption from this year forward: gateways, developers, and applications. So let's start with gateways. This is connecting, you call it the legacy financial system. I'll stick with traditional, but this is connecting banks and brokerage firms with blockchain rails so that it's a little bit more seamless, the back and forth between things in US dollars, for example, and things in crypto terms, products and services that can move back and forth between the two. I would agree that should be the priority. Tell me about why gateways are going to be important.
Yeah, when you look at the market cap in crypto today, it's basically at $3 trillion. And it's all crypto native assets, right? It's Bitcoin, Ethereum, Solana, things that are just native to crypto networks. But the real power and the real inflection point comes from the traditional system bringing over $1,000 trillion of financial assets, right? The net worth that's held by individuals, corporations, governments, all of those, I think, follow this simple rule in finance, which is that assets want to go wherever they can flow most freely, trade most efficiently, and find their most attractive price, right? And so when you think about a share of Apple today, it's listed on the New York Stock Exchange. It's held in your brokerage account. There's people in countries outside of the U.S. who would love to own Apple, right? They love to have a piece of ownership in that, but they might not be able to, right? Yeah, in the traditional system, you need your local brokerage, your local fintech to find the right connections and actually bring that asset over, right? That's called depository receipts, and that's why you can trade Alibaba on the New York Stock Exchange.
So some people would say there's a reason for those gates and that we don't necessarily want all of those gateways open. We don't necessarily want foreign investors to seamlessly be able to invest in U.S. companies and vice versa. We don't necessarily want U.S. investors to have entree, to markets all over the world. I guess some of that is like an ideological thing. Like, is this what's best for America? It sounds like from within the blockchain industry, the answer is always going to be a resounding yes. People should be able to move their money where they want. Is that where you guys stand on that? Is that the ideological bent of the argument?
I think that's the starting point.
Okay.
I think the default assumption is that if we truly own our assets, we should be able to have them available on any exchange. There's no reason why it needs to be just New York or just Hong Kong or London. It should be available anywhere because that's the best way to do price discovery. It's the best way for a free market to run. Now, there's always going to be a counterforce, right? There's always going to be other priorities that the U.S. government needs to go and satisfy, which is protecting our national interests. But I think that comes after, right? That comes when you actually identify the problem and before you freeze out all of the good things that are happening in capital markets or should be happening, right? The markets that should exist but don't. And that's where blockchains are really powerful, is by enabling those markets.
Okay. Remittance payments are a really obvious example of where the blockchain is already being the influence of the blockchain is already being felt. You point out we must scale platforms that can effectively onboard new users and existing assets. Regional on-ramps like Bitso in Latin America are processing over 10% of U.S. to Mexico remittances using blockchain. So that's like Western Union. That's like a MoneyGram. Somebody is here working. They want to send money home to their family. The fees to utilize traditional finance to move that money are obviously high. The complication is high. Blockchain is an easier way to do remittances. And indeed, you point out it's like 1 out of every $10. That's notable. So as that gains acceptance now and less regulatory scrutiny, could that be 50%?
Yeah, it makes a huge difference. That's basically a month's wages for a migrant worker. And so the fact that that's how much gets paid out to Western Union and MoneyGram today is just disproportionate to the value that they're providing, right? I think Bitso and others in Brazil and Mexico, Argentina, they're providing a really valuable service, which is that payments don't have to be this gate-kept service. They're something that you have a right to do. You have a right to send the money that you've been earning where you want to send it. And so sending that cost to as close to zero as possible is really something that will add value to just the economic GDP of the world.
One more example you use in terms of gateways is a company called Ondo. I guess it's a platform that is going to do tokenization work for traditional existing securities like U.S. Treasuries, for example. You note that there are $20 trillion in U.S. Treasuries currently. They do not trade on the blockchain. They are not digitized. They are not tokenized. But you think that's something that is now going to get underway?
Absolutely. Ondo, I think, is one of the biggest stories to watch this year. They've started with U.S. Treasuries, tokenizing them and distributing them outside of the U.S., where exactly that kind of market need is present, right? People want to own some type of yield or some type of wealth preservation asset that is tied to the strength of the U.S. economy rather than their own local economy. But that's just the start, right? U.S. Treasuries are just the beginning. They're competing already head to head and sometimes doing even better than BlackRock and Franklin Templeton, who are doing the same thing. There's $2 billion of tokenized treasuries already, but it just sets up a blueprint for everything else to come on chain, right? At the end of the day, this is just a template that you can apply to stocks and bonds and the rest of capital markets. So I think this is just a set of dominoes that's starting to fall.
So a foreign investor who may not have access to the ability to buy U.S. Treasuries through a local brokerage firm or bank in their home country can have an account that connects with the Ondo platform. They can take their own local currency, they can convert it into digital a digital ownership stake in U.S. Treasuries, so they don't own it directly, but they own a coin that is backed by the Treasury.
Exactly. They own a token that's backed by a U.S. Treasury, and that's custodied at a financial institution that
and they get the yield too?
They get the yield as well.
Okay.
Exactly. Okay. And
Okay.
all they need is a mobile phone and a wallet to be able to interact with Ondo's platform. But at the same time, it's not just about the individual. Think about the Robin Hood of Indonesia that wants to do something like this for their customers. For them to do that today in the traditional system, they need to go find a partner. They need to go sign a bunch of contracts. It's a 6-month thing if everything goes well. This is something they can do overnight. It's connecting to an API and just as easy as doing that. So it's also about helping the local financial systems actually modernize.
Okay. A couple of other names that you mentioned here. TipLink, which is, I guess, micro payments in crypto denominated terms. Very simple, not dissimilar from Venmo, I'm guessing. Just if you want to pay your gardener or you want to pay your beautician and they want to take cash, but we're in this cashless ecosystem. This is another way to accomplish that if you have assets that are digital versus dollars sitting in a Venmo.
Yeah, we've come a long way in onboarding people to crypto, right?
Yeah.
It should feel like Venmo, and the way TipLink has really done a good job of this is it feels like just getting a text message that says, hey, grandma, your grandson has sent you $5. Do you want to accept it? And in the background, it's setting up a wallet for her. It's setting up all the ways that she needs to interact with it in a normal way, but it's crypto behind the scenes. And that dollar or that $5 that she's getting is actually much more powerful than the average dollar, right? It can be used in so many different places, and she can take it abroad and actually use it.
Okay, so the gateways are a big mega trend. The next one is developers. This is you. There are about 100,000 developers building on blockchains today. That's higher than I would have guessed. That's half of a single Silicon Valley tech giant. To enable mainstream adoption, we need to increase that by 100 times and onboard 10 million developers. Do we? We need to? What will they all be doing?
Well, they'll be building new products and applications. I mean, this goes back to what has been holding back tech talent and entrepreneurs coming into the space, right? 100,000 sounds like a lot, but in the grand scheme of things, if you're really talking about a new technology sector where there's a ton to build and so many different verticals to go after, the fact that there's only one half of a typical technology company is outrageously small. Right. It doesn't make sense that it's been 10 years of blockchains being in full production. And that's the talent pool that has been able to come into the space and feel. Did you have to explain
to your family why you were taking your Wharton degree and deploying it on behalf of blockchain versus going to Apple? Like, did you have to make that explanation yourself? Did your friends from school have to do that?
Okay. Yeah, it's definitely
there was a stigma. It was either like, this is fake shit anyway, this is like not real money, or these are all criminals and like, it must have not been easy to explain to everyone in your life.
Yeah, I started this journey back in 2015, right? Where every time I walked into a conference room in JP Morgan to talk about the technology, I would leave with people kind of laughing.
It's the crypto guy.
Yeah, exactly. Right. So half of them would say, wow, this guy is going to end up in jail. And the other half would say, wow, this is not serious. We don't need to worry about it. Right. So getting past all of that has definitely been, part of that journey. But now I think the sentiment has really changed. And, for that new college grad with a computer science degree who's saying, look, where do I go next to build something big? They can feel a lot more comfortable saying they're going to do it with blockchain and crypto.
Yeah, it's a legitimate on-ramp now for talent, and that stigma, maybe it hasn't gone away yet, but the clouds are definitely clearing. You talk about where these developers are going to go. One of the things that you seem to be excited about is multi-chain, different blockchains that talk to each other. that being important as this ecosystem develops. Yeah, I guess it should be obvious to people who don't know anything about crypto that if we're laying all these rails, they sort of have to be able to be interoperable.
Yeah, it's something to sort of think about is we've had so many different operating systems, so many different social networks, and in blockchain we've only had a pretty narrow set of options. So as technology evolves,
like Ethereum, Solana, and maybe a couple of other base layer ones, but not a situation where everybody who's building something can have their thing talk to the other person's thing, and that's
exactly
like kind of what's missing.
Exactly. When you look back at the cycle of technology adoption, that's something that naturally has to occur, right? People are going to come in with new needs, with new requirements, new things they want to do. JP Morgan coming in to tokenize their balance sheet is not going to look the same as what I want to do with my assets in a video game, right? And so to solve for both of those things is going to look like a different set of technology stacks.
Okay, you talk about zero knowledge technology, and no code solutions, and things that on the surface they seem daunting. They are in non-blockchain technology, so why wouldn't they be daunting in a crypto context? But what do you mean by zero knowledge technology, and why is that an area now that you think will see some traction?
Yeah, zero knowledge technology has been one of the most promising parts of blockchain. It's the idea that you can reveal information without giving away the underlying data. So, for example, one of the classic cases is if you walk into a bar and you get carded, right? They want to know that you're over 21. Well, you hand over your driver's license and suddenly they have your address, they have your phone number. Right. Well, they have, everything about you. And all they needed to know really was that you're over 21. So they don't need to know my exact age even. So the idea is you can verify that fact without giving away the entire set of information. And so that type of application is super useful for things that require that level of privacy. Great example of this is something that one of our portfolio companies, Verimo, is building called Freedom Tool, which is a digital voting solution. So obviously that's been a huge topic, is the transparency, the validity of elections. How do we actually know that they're happening in a fair way? And they're testing out this technology now in some of the most controversial places in the world, Russia, Iran, Venezuela. And so the idea is people can vote and verify that they're a citizen without giving away their identity.
Oh, that's interesting. Okay. And then let's talk a little bit about no code solutions. I mean, we've seen one of the hottest stocks in the traditional stock market last year was AppLovin, and just companies that are enabling people who are building applications, software products to I guess to do more with less to some extent is part of the story there. Why do you see this as part of the big trend in blockchains this year?
I think it's one of those things that has to happen for us to get from 100,000 developers to 10 million, right? Okay. Is the average person building on blockchain 10 years from now, hopefully is not someone who needs to have a PhD in zero knowledge technology or needs to understand distributed networks, right? It's someone who, you think of as building a storefront on Shopify or building a website on WordPress, right? Making it easier and easier to abstract the underlying complex technology away so that we can really unleash the creativity from folks who aren't as close to the technology's back end. And so this kind of evolution of going from the raw code to low code to no code to now people being able to launch websites just by talking to ChatGPT, that's the same kind of evolution that blockchain is going to have to go through for us.
So if I have an idea for how blockchain could work, there should be tools available where I can express that idea and turn it into something without having come from MIT.
Exactly. And it's just about finding out what the right building blocks are that people want to build with.
Yeah, I actually think the better analog to that comes from social media. Like, none of us are trained photographers, but Instagram built a tool that makes our shit look good. Makes it so that we can edit photos as though, we studied, at film school or photography school, but of course none of us did. So I see that as being an obvious thing. I don't know how many civilians will actually have something relevant that they want to build in blockchain, but like, for the 1 out of 1,000 who actually do, that could change the world. The way Kevin Systrom changed the world with his idea for Instagram. Like, we don't know. How could you rule it out, I guess would be the point.
Yeah, actually a great example that's live still comes from the NFT world, which some of your listeners might have some association with.
Well, Batnick went all in on NFTs, right into the top.
Yeah, a lot of people did, and it's just part of that initial sort of exploration and experimentation. But the part that really resonated and I think has the sticking power is the fact that real artists actually embraced this movement and said, look, this is a way for me to generate new revenue where I don't need to be limited to an art gallery in Soho, and I can instead sell to the entire world and still have kind of the rarity and the specialness of my pieces happen through digital technology. That's the kind of thing that we want everyone to have the power to do, right? Because, you can become a creator and an artist from anywhere in the world.
Yeah, and it takes out some layers in between the artist and the artist's fans. And if you want that kind of relationship as an artist, it makes that possible. All right, let's do the last one. Applications is the third mega trend that you see as being key to this year. I'll quote you. By most estimates, the number is around 80 million on-chain users. Much of that growth comes from crypto's appeal as Wall Street 2.0, a new place to raise capital, speculate, and send money. Yes, we can all agree the biggest success in crypto so far is getting people to trade crypto. Okay. I could see that being good and bad. But expanding 100x to 8 billion people from 80 million people who are on-chain will depend on crypto's shift from Wall Street to Main Street. All right, so this is the thing that people like me say. If this technology were truly as important as its believers say it is, why do I not see any examples of it in my real life other than speculation and I guess store of wealth being, another obvious use? And my wife and her friends are not using it. And until they are, the promise of crypto will never be able to be said to be fully fulfilled, I guess. That's my attitude. But tell me if finally we're at the precipice of some of these things breaking through and becoming mainstream.
Yeah, exactly right. We need to break through from crypto just being Wall Street 2.0, right? Because that's only going to attract people like you and me who are into investing
or as I've said it, nerds and junkie gamblers. There's got to be like normal people that are utilizing this stuff.
Exactly. And where I see it happening first is going to be in things like gaming. Because you talk about your wife having a reason to interact with blockchains. Ultimately, it's the people who are playing Candy Crush, right? I think of the journey that Facebook went through, where their first social gaming hit was an app called Farmville.
Yeah.
And that was really the thing that led to the huge inflection point and the huge network effects in Facebook's growth, right? Before that, it was just photo sharing between college campuses. And this was what really onboarded the mom and pops. And
it's a great point. Like Farmville came along and people started sending it to each other, and it was in-app purchases was the business model. And you had, I guess, Mafia Wars around the same era, and maybe 2 or 3 others I can't remember. But you're right. That was probably the first time that people were like, "Where are you doing that?" And people said, "Oh, on Facebook." And that was like an onboarding moment for millions of people.
It was. It
Yeah.
was. I think 80 million people at Farmville's peak, which is
Wow.
today a small fraction of
Yeah.
Facebook's user base, but it was really what kicked things off because suddenly these connections between people were not just limited to college campuses. So I think crypto is starting to hit that Farmville moment where
So
through gaming-
people using crypto in the context of playing a game.
Exactly. Playing a mobile
Okay.
game. There's a great one out of our portfolio from a company called Infinigods. You can download it today. It's called King of Destiny.
Okay.
And when you first open it up, it feels just like another great addictive game you could play on the bus or the train. But when you get to a certain point, you get this pop-up that says, hey, would you like to
Insert more
sell?
ETH.
Well, that too, if you really love the game.
Yeah.
But the magic of it is also that you can sell to other players.
What
that
can you sell?
Well, you can sell the assets that you earn in the game
Okay.
to folks who maybe want to progress through the game faster, right? So there's
Okay.
this constant sort of arbitrage of people who are going to be big spenders and people who are going to be big earners in the game, right? So
Sounds like
I
real
can-
life. Sounds like America. All right,
Yeah.
How many people do you have playing this game right now?
Well, there's been over 2 million downloads already
Okay.
in just a few
All right.
months. So they're well on their way. But the magic of it is that what's happening behind the scenes for you to sell to other players is blockchain.
Okay.
You might be selling to someone in South Korea or Brazil. And that's not something that the typical game pre-blockchain could do. That's a huge undertaking. But it comes basically in the box, out of the box with blockchain technology.
All right, let me reel off a couple of these rising trend predictions, and then we'll wrap. Just pick one of these that you think is worth getting into for a moment. You say RWAs, also known as real world assets, excluding stablecoins, will account for 30% of on-chain total value. Bitcoin Fi, you think there's going to be Bitcoin native finance protocols that don't require bridging. I sort of believe that could happen just because of how widespread Bitcoin ownership is and how comfortable people seem to feel with it. Okay. Fintechs become crypto gateways. So this is WhatsApp and PayPal and Venmo. 100% this is happening. The only question is the extent to which it happens. Throw Block in there and a bunch of other names. Okay. Unichain becomes the leading L2 by transaction volume. NFT resurgence, but application specific. Restaking launches, which I don't know what that means. And then you've got a bunch of other stuff. Which of those is worth exploring for a non-crypto audience?
I'll pick the first one,
Okay.
which is real world assets becoming tokenized. I think that's the one that is going to get everybody extremely excited. And, we think it's going to-
real estate, art, securities.
I think it's going to exactly that, but I think it's going to start probably with people's stock portfolios. And I think the real magic moment that people are going to experience, hopefully soon, is when they realize that their share of Apple or Tesla is actually worth more after it's tokenized. And that's when I think all the financial institutions and brokerages will wake up and say, oh, wait, our customers are asking why their portfolios are not worth as much as they could be. Because
why is it worth more? Why is a share of Apple worth more once it's tokenized?
Because once it's tokenized, you go from it being limited to a local market where people have demand to go and buy that asset to now a global market, right? Blockchain's unlocking the first truly global capital markets. So the price discovery that's still kind of hidden to us is where people without access to the U.S. Financial system can actually go and express their demand by being willing to pay a higher price for it.
Foreign investors have no problem buying and selling Apple. Maybe that's not the best example, but there are probably some securities that are more obscure, harder to access. And if they had a bigger pool of potential buyers, like de facto, they would be more valuable. I just don't know that I would pick the largest stock in the world that's probably already 30 or 40% owned by foreign institutions as it is. But I certainly can appreciate what you mean by that. So you think that's a 25 story, the tokenization of publicly traded securities?
I think it will be. I mean, just
Okay.
look at the conversations coming out of the World Economic Forum in Davos, right? You've got Larry Fink, CEO of BlackRock, saying he's hoping that the SEC will rapidly approve tokenization of assets, stocks, and bonds. You've got the CEO of Bank of America saying he's predicting the same thing, and if it all actually gets the green light, big banks will be extremely active on the transactional side. Which to me sounds like they're going to go and buy a crypto business that'll allow them to hit the ground running.
Yeah, they want to do it. They want to do it, but they need approval. They're not pioneers. They're not Pantera. They're something else. They're 200-year-old institutions, and they need to be told, yes, you can do this. So, all right, so they're getting that. All right, listen, Franklin, this has been incredible, and I want to tell the audience where they could follow you and Pantera and learn more about what you guys are thinking about these markets. So they can go to PanteraCapital.com and go into the Insights tab, and the blockchain letter is there. Your conference calls are there, the blog, any press that you guys do. Where can we follow you personally on social media? Where do we go?
I'm on X at Franklin B. My first name, last name.
Spelled B-I, guys. Franklin B-I-B.
That's right. And I also publish my thoughts on a newsletter called Chain Brain, which if folks are interested in following along, they can subscribe.
All right, awesome. Thank you so much for spending this time with us. We really appreciate it. Everybody go out and follow Franklin. Check out Pantera Capital. Can we have you back as things develop?
A lot's going to happen this year, so I'm happy to come back anytime.
All right. We'll hit you later. All right. Thanks, everybody. Talk to you soon.